Enjoy learning!
Here are the most essential learning competencies. At the end of the lesson, students are expected to first, explain the varied accounting concepts and principles, and lastly, solve exercises on accounting principles as applied in various cases. What are basic accounting principles? Basic accounting principles are the rules and guidelines that companies must follow when reporting financial data. Meaning to say, it is the foundation of the accounting theories and application, and it serves as the guide in good accounting record. Here are some of the basic accounting principles. So we have 7 basic accounting principles. First, the economic entity assumption. Second, the full disclosure principle. Third, the matching principle. Fourth, the revenue recognition principle. Fifth, the materiality principle. Sixth, the conservatism principle. And lastly, the objectivity principle. In economic entity principle, a business is considered distinct from owner, and therefore all business transactions are treated separately from business owner's transaction. So meaning to say that owner's transaction is very different from the business owner's transaction. They are separate. They should not join and mix up. To fully understand what is economic entity principle, here is an example. If the owner has a barber shop, the cash of the barber shop should be reported separately from personal cash. So it means that the cash from the barber shop is for the barber shop business alone. You cannot get the money from the barber shop to buy something for yourself. It should be recorded on the barber shop income, not on your personal cash. Personal cash and business cash should not be mixed up. Another accounting principle is the full disclosure principle. So according to this principle, the accountant should include sufficient information to permit the stakeholders to make an informed judgment about the financial condition of the enterprise. So, the transparency in this principle is very important. So, the accountant should have the full details of the company, especially on the financial condition. It is very important that the business is known to everyone. 100% data should be given to any stakeholders. Another accounting principle is the matching principles. So in matching principles, revenue should have an equivalent expense recorded in a given accounting period to show the true profit of the business. Cost should be matched with the revenue generated. In short, every revenue should have a corresponding expense or cost. Palagi may pagbabanggaan ang iyong revenue. Walang business na nagkaroon ng revenue without having the cost or expenses. Lagi yung banggaan. Revenue and the expense. To have a clearer understanding of the matching principle, here's an example. When you provide tutorial services to a customer and there is a transportation cost incurred related to the tutorial services, it should be recorded as expense for that period. So sabi ko nga kanina, if you have a revenue, that will always have a corresponding expense or cost. So in the example, you had a tutorial services and the corresponding expense is the transportation cost. So you have the income on the tutorial services by having the corresponding transportation cost. So hindi ka makakapag-provide ng tutorial services without the transportation cost. You use it to go to the business and go back to your own home. So that is the matching principle. Nakikita nyo dun yung revenue side and the cost or the expense side. Another accounting principle is the revenue recognition principle. So according to this principle, as soon as goods have been sold or services has been rendered, regardless when the money is received, revenues are to be recognized. After an exchange of transactions occurred and the earning process is complete, revenue must be recognized. So meaning to say, whether it is cash or accounts receivable, the revenue must be recognized. So ano ibig sabihin nun? Whether ito ay cash na binayadan sa'yo or utang, dapat it should be considered as revenue. So later in our discussion, I will explain to you the difference between the cash and the accounts receivable. They are two different account titles, but they are considered sources of revenue on our revenue recognition principles. Materiality principle. To decide whether an amount is significant or material requires professional judgment and all business transactions that may affect the decision of the user of the financial information and are considered important or material must be recorded properly. So in this principle, we considered assets which are material or immaterial to our business. So there are assets that are used up and expired in a certain year. So in example on the next slide, I will fully explain to you what is the materiality principle. So here's an example to fully understand the materiality principle. In case of assets that are immaterial, to make difference in the financial statements, the company should instead record it as expense. So here's the example. A school purchased an eraser with an estimated useful life of 3 years. Since an eraser is immaterial relative to assets, it should be recorded as an expenses. So, not all assets are assets to the companies. Some are eventually became expense. For example, the eraser. So, the eraser had a useful life of 3 years. So, within the 3 years, the pencil or the eraser can be called asset because it remains on our company, in our business. But after 3 years, it will be considered expense. Why? Because we need to replace the eraser in our company. We will purchase another one to replace the eraser. Because the useful life of the eraser are not anymore good. It is beyond the 3 years. Another accounting principle is the conservatism principle. If a situation arises wherein an accountant has two acceptable alternatives for reporting an item, it guides that the accountant to choose the alternative that will result in the less effect and or less asset amount. The lower amount should be recorded rather than the higher value. Also known as prudence. In case of doubt, assets and income should not be overstated, while liabilities and expenses should not be understated. In case of doubt, expenses should be recorded at a higher amount and the revenue should be recorded at a lower amount. So why should we have recorded the expenses in a higher amount? So madali lang yan. So if it is recorded in a higher amount at dumating yung billing natin at a lower cost, meron tayong savings kasi inilat natin yung mas mataas na expense. And revenue should be recorded at a lower amount. Bakit? For example, ang i-declare natin kita ay 700,000 pero at the end of the month, ang naging revenue natin is 1 million. So, maganda yon. It will increase eventually our revenue. Hindi yung nag-declare ka ng revenue ng 1 million pero ang actual na dumating is 700. Saan tayo kukuha ng pang-patch up sa 300,000 pesos? Palaging tatandaan that the assets and income should not be overstated, while the liabilities and expenses should be understated. So, lagi tayong conservative. Lagi tayong magsisigurado. The last accounting principle is the objectivity principle. So, according to objectivity principle, financial statements must be presented with supporting evidence. So, meaning to say, all the presented statements should have an evidence. Hindi yan gawa-gawa. Hindi yan hocus-pocus. Concrete dapat. The financial statement can stand alone. Kahit wala kang gawin dyan, paninindigan ng financial statement ang sinasabi sa book ng ating accounting. So example, when the customer paid Jollibee for their order, Jollibee should have a copy of the receipt to represent as evidence. So yan, napakahalaga nitong last principle kasi nandito yung financial statement, nandito yung transparency of our financial statement. And how will it be transparent? So, to have the objectivity principle, using receipt as an evidence, palaging mayroong ebidensya. So, there should always be an evidence of the financial transaction. Lagi dapat legit ang ating transaction. And we should not violate the objectivity principle. Mahalaga ito sa ating accounting record. Here are the most essential learning competencies. At the end of the lesson, students are expected to illustrate the accounting equation, and lastly, perform operations involving simple cases with the use of the accounting equation. What is an accounting equation? Accounting equation shows on company's balance that a company's total assets are equal to the sum of the company's liabilities and shareholders' equity. So in short, asset equals liabilities plus owner's equity. Asset should be balanced to the sum of the liabilities and the owner's equity. And the accounting equation is the most important equation in our accounting one. There are basic elements of accounting equation, namely assets, liabilities, and owner's equity. So, if one element in the accounting equation is missing, accounting equation won't be possible. Hindi yan magiging posible. Hindi yan magiging balance. Palaging tatandaan that those three elements should always be present. Let me discuss to you one of the basic elements of the accounting equation, which is the assets. Assets are the resources controlled by the business as a result of the past transactions and events from which future economic benefits are expected to flow to the business. So in short, assets are the properties owned by the business from the start of the establishment of the business. So in Tagalog, ito yung mga bagay na pagmamayari ng business simula nang itayo ito. Assets are used to make or to stabilize our business. So ito yung ginagamit natin upang magpatuloy ang business. Business will not grow and continue without assets. Imposible magkaroon ng business nang walang assets. So assets are very important in our business. Here are some of the common account titles under assets. So before that, let me discuss to you about account titles. So account titles are the entries we use in the accounting record. So napakahalaga nito. Later we will use it in our debit and credit account. So here are the common accounts, the cash, the accounts receivable, the notes receivables, the inventories, the unused supplies, and the prepaid rent. So in this module, I will not discuss to you the definition of each terminology because we will discuss it separately on our next week. Another common titles under assets are equipment, furniture and fixtures, building, land, allowance for doubtful accounts, and accumulated depreciations. So as you can see, assets are truly the properties owned by our business. So primarily, the cash, land and building, and the equipment. So those are the most common account titles under assets. If we have assets, we also have liabilities. So what are liabilities? Liabilities are the present obligations of an entity arising from past transactions or events. The settlement of liabilities is expected to result in an outflow of resources from the business embodying economic benefits. So in short, liabilities are all the debts of your company. In Tagalog, lahat ng pagkakautang ng iyong business while it is operating. So, no business had no liabilities. A business without liabilities is abnormal. So, kita nyo, yung mga mayayaman. Kung sino pa yung mayayaman, sila pa yung malaki ang liabilities. Why? Because liabilities are used to start and continue business. Liabilities are used to increase our asset, to increase our capital. So, liabilities is very important. Among the common account titles under liabilities are accounts payable, notes payable, loans payable, mortgage payable, interest payable, and bills payable. Napakasimple ano? All of them are payables. So, they are payables in short term and long term. So, pwede itong pangmadalian, pwede naman itong long term. Pwede 3 years, 5 years, or 10 years. So, it depends upon the company. It depends upon sa agreement ninyo ng iyong inuutangan. Basta mahalaga, liabilities are all payables. Another common account titles under liabilities are the bonds payable, long-term notes payable, deferred tax liabilities, accrued liabilities, and the current portion of long-term debts. So as you can see, some of these account titles under liabilities are too technical. So these liabilities cannot be seen on a sole proprietorship business. So makikita nyo ito in cooperatives and corporation. So it is seen in a more complicated business structure. So after we had the two basic elements of the accounting equation, which is assets and liabilities, we had the final one, which is the equity. So equity contains the net difference between the total assets and the total liabilities. So napakadali pala nito. Equity is just the difference between the asset and liabilities. So, ito yung tira after we deduct the liabilities from asset. O sa madaling salita, ito yung tira after bawasin natin yung ating pagkakautang mula sa ating lahat na pagmamayari or assets. Here are some of the most common account titles under equity. First, the owner's capital, the common stock, the preferred stock, the additional paid-in capital, and the retained earnings. So in this account titles, owner's capital is the most common, and the remaining are encountered in our accounting too. So in this accounting one, we will focus more on the owner's capital. So if we have an accounting equation which is assets equals liabilities plus owner's equity, we also have the debit and the credit side. So what will be our debit and credit side? So the asset or the left side is called the debit side, while the right side or the liabilities and owner's equity is called the credit side. So wag tayo malilito. Left side is the debit and the right side is the credit side. So we will use the principle of debit and credit on our next topic, which is about the rule of debit and credit in the T account. So I will discuss it later. In accounting equation, there are some important key points. So key point means important reminders or rules. First, the accounting equation must always be balanced. So palagi yung tatandaan, it is not an accounting equation if the asset is not balanced or not equal to the liabilities plus owner's equity. It should always be balanced. Next, if assets increase or decrease, liabilities and or owner's equity must increase or decrease by the same amount. So meaning to say, if asset increase, liabilities and owner's equity will always increase. They have the same increase. If the asset decrease, the liabilities and owner's equity will also decrease. So that is another rule. Another accounting equation key point is that accounting equation principles is used in recording business transactions. So what are business transactions? Business transactions are the economic events that happen in our business. So ito yung mga nangyayari. For example, bumili ka ng equipment, nag-start ka ng business with a capital, nangutang ka, nagbenta ka, nagbayad ka ng sweldo. So those are examples of business transactions. And out of that, the accounting equation should always be used. Gagamitin yon together with the debit and the credit side. Sama-sama sila doon. So accounting equation is truly important. Next, it is heart of the accounting cycle. So bakit? So without the accounting equation, the accounting cycle cannot start. The business transaction is the starting business, the starting point of the accounting, and the business transaction is not possible without our accounting equation. And lastly, open and close parentheses was used to indicate negative or deductions. So in accounting, it is rare to use the negative side. We use the open and close parentheses to show negative or deductions. Okay, lastly, the accounting equation key point is that honesty and organization of data must be strictly be followed to show transparency in recording the data and in preparation of financial reports. So, if we will be a future accountant, we should be honest and organized. So, why do we need to be honest? Because all the data in accounting should be realistic. No falsification of data. And we also need the organization of data. Why? Because the accounting record should be transparent, should be organized, and easily understood. So, how can we easily understood the accounting data and the financial statements? So, through the organization of such data in accounting. And we'll start on the business transactions. So, if we have accounting key points, we also use different accounting equation formulas. So, in accounting equation, we have three accounting equation formulas. First, the standard formula, which is the asset equals liabilities plus owner's equity. Then, we have the formula liabilities equals asset minus owner's equity. And lastly, owner's equity equals asset minus liabilities. So how come we come up with that formulas? We just use our mathematical knowledge in algebra in arriving such formulas on the three basic elements of accounting, which is assets, liabilities, and owner's equity. Always remember and familiarize those equations because we will use it in our later discussion. Application of accounting equation. So as you can see, we have table for assets, liabilities, and owner's equity. And some of the items are missing. There are missing assets, missing liabilities, and missing owner's equity. So how can we solve each one? We will use the accounting equation formula. So we have three accounting equation formula. First, assets equals liabilities plus owner's equity. Second, liabilities equals assets minus owner's equity. And the last one is owner's equity equals assets minus liabilities. Okay, let's solve number 1. So as you can see, liabilities is unknown. So the formula that we will use is liabilities equals assets minus owner's equity. So this is the formula that we will use. So liabilities is unknown, assets equals 1 million, and the owner's equity is 500,000. So liabilities equals 1 million minus 500,000 is equal to 500,000. Let's proceed to item number 2. So as you can see, assets is unknown, while liabilities and owner's equity are given respectively. For liabilities is equal to 300,000. For owner's equity is equal to 400,000. So we will use the accounting equation, which is asset equals liabilities plus owner's equity. So assets is unknown, then liabilities plus owner's equity. So 300,000 plus 400,000. So the value of asset is 700,000 pesos. For item number 3, the owner's equity is unknown, while the assets and liabilities are given respectively. The value of assets is 1.5 million and the value of liabilities is 900,000. So the accounting equation that we will use is owner's equity equals assets minus liabilities. So we will use the formula. Owner's equity is unknown, while assets and liabilities are given. So assets, 1.5 million minus the value of the liabilities, which is 900,000. So 1.5 million minus 900,000 is, the value of owner's equity is 600,000 pesos. On item number 4, the liabilities is unknown, while assets and owner's equity are given respectively. For assets, the value is 2 million, and for owner's equity, the value is 1.7 million. So what accounting equation will we use? So we will use liabilities equals assets minus owner's equity. So liabilities is unknown, assets is 2 million, minus the value of owner's equity, which is 1.7 million. So the value of the liabilities is 2 million minus 1.7 million is equal to 300,000 pesos. On item number 5, assets is unknown, while liabilities and owner's equity are given respectively. For liabilities, it is 900,000, and for owner's equity, it is half the liabilities. So what accounting equation will we use? So we will use assets equals liabilities and owner's equity, since asset is unknown. So before we solve for asset, we should know the value of the owner's equity. So there is a condition. So the condition is owner's equity is half the liabilities. So we will solve the value of the owner's equity. Owner's equity is 900,000 times 0.5, which is 450,000. Then we can now solve for the value of assets. So direct substitution to the formula. Assets equals liabilities plus owner's equity. The value of the liabilities is 900,000 and the value of the owner's equity is 450,000. So 900,000 plus 450,000 is 1,350,000. So the important reminders in the application of accounting equation is that we should know the three basic accounting equations. So first, assets equals liabilities plus owner's equity. Second, liabilities equals asset minus owner's equity. And the last one is owner's equity equals assets minus liabilities. And we should always remember that the accounting equation is always balanced. As I've said earlier, that accounting equation is needed in our business transactions. So accounting equation is primarily used to record our business transactions. So in this example, I will fully explain to you on how the accounting equation is being used to record such transactions. So here are the business transactions. We have 6. First, Mr. Agor invested 100,000 to start a printing business. Second, purchase supplies on account worth 20,000. Third, issued payment of 2,000 for the supplies bought on account. Fourth, issued payment of 1,000 for utilities. Fifth, cash purchase of office furniture worth 5,000. And lastly, Mr. Agor issued a promissory note for the remaining balance of transaction number 2 that was long due. Let's have the application of the accounting equation on the business transaction number 1. Mr. Agor invested 100,000 to start a printing business. So, how will we record this transaction number 1? We will again use the accounting equation, which is assets equals liabilities plus owner's equity. So on this transaction, we will analyze which account title are under assets and which account title are under liabilities and owner's equity. A while ago, I said that the assets are the debit account and the liabilities and the owner's equity are the credit account. So on this business transaction, the asset is cash because Mr. Agor received cash worth 100,000 and its classification is assets. So if you have 100,000 worth of asset, you need to have a 100,000 worth of liabilities or owner's equity. So in this case, on business transaction number 1, the corresponding owner's equity is the Agor capital, which is 100,000. So, asset equals 100,000 equals, there is no liability, 0, plus owner's equity, which is Agor capital, 100,000. So, the accounting equation, assets equals 100,000, then liabilities is equal to 0, plus owner's equity is 100,000. So, it is balanced that the total assets is equal to liabilities plus owner's equity, which is 100,000. Business transaction number 2. Purchase supplies on account worth 20,000. So, on our previous example, we need to know what account titles are involved on the transaction. So, the account titles that are involved on the transaction number 2 are
the supplies, and the account payable. Then after that, we will use the accounting equation to plot the business transaction. So we will classify the supplies and the accounts payable. So supplies is an example of assets, while accounts payable is an example of liabilities. Then after that, we will plot each account title on corresponding column. So if it is an asset, if it is a liability, or if it is a owner's equity. So supplies is an asset which is worth 20,000. Then the liabilities, account payable which is 20,000, and we don't have owner's equity. So the value of the owner's equity is 0. So a while ago, I discussed that assets is the debit account and the liabilities plus owner's equity is the credit account. So on the left side, asset equals 20,000, and on the right side, which is liabilities plus owner's equity, 20,000 plus 0. So total assets is 20,000 and the total liabilities plus owner's equity is 20,000. So at the end, it is very important that our accounting equation is balanced. And it is balanced because 20,000 equals 20,000. Business transaction number 3. Issued partial payment of 2,000 for supplies bought on account. So our first step is to identify what accounts are involved on the transaction. So on this transaction, the accounts titles that are involved are the cash and the accounts payable. So we will plot it in our accounting equation, which is assets equals liabilities plus owner's equity. As you can see, the value of 20,000 is negative since we had payment. So our cash is outgoing. So there is a negative sign. And liabilities, accounts payable negative 20,000. So it indicates that we decrease our account payables. And for our owner's equity, it is 0. So asset equals negative 20,000 and the liabilities is negative 20,000 plus 0. So using our accounting equation, assets equals liabilities plus owner's equity. Total assets is 20,000 and the total liabilities plus owner's equity is negative 20,000. So our transaction is balanced using our accounting equation. Business transaction number 4. Issued payment of 1,000 for utilities. So our first step is to identify what are the account titles that are involved on the transaction. So for asset, it is cash, and for the owner's equity, it is utilities expense. So now our basic accounting equation, expense is under owner's equity. But on our expanded accounting equation, expense is in different column, which is expense. So for the meantime, we will categorize it under the owner's equity. So for asset, it is 1,000, then equals to liabilities plus owner's equity. The value of liabilities is 0. And for the owner's equity is negative 1,000. So negative 1,000 is equal to negative 1,000. So this shows that the accounting equation is balanced. Business transaction number 5. Cash purchase of office furniture worth 3,000. So our first step is to identify what account titles are involved in transaction number 5. So the account titles that are involved are cash and office furniture. So as you can see, this example is very different from our previous examples because there is no liabilities and owner's equity account involved. it is purely asset accounts. So cash, negative 3,000. So why it is negative? Because we purchased office equipment. We had a payment of 3,000. So it indicates a payment, the negative sign. Then office furniture, 3,000. The value of liabilities is 0. And the owner's equity is 0. So 3,000 minus 3,000 is 0 equals 0 plus 0. So our accounting equation at the end is 0 equals 0. Therefore, the business transaction is balanced. Business transaction number 6. Mr. Agor issued a promissory note for the remaining balance of transaction number 2 that was long due. So again, our first step is to identify what are the account titles that are involved in the transaction. So for transaction number 6, the account titles that are involved are the accounts payable and the notes payable. So as you can see, this example is also very different from our example from transaction 1 to 5. So there is no asset account title and there is no owner's equity account title. It is purely liabilities account title. So for asset, 0. For owner's equity, 0. And for liabilities, it is accounts payable, which is negative 18,000. So meaning to say, we made a notes payable to delete the account payable. So from the previous 18,000 value of accounts payable, it become 18,000. So the present account payable is 0. Then the notes payable is 18,000. So the total liabilities is 0. So let's have the accounting equation. Asset equals liabilities plus owner's equity. 0 equals 0 liabilities plus owner's equity, which is 0. Let's have the accounting equation. That should be balanced. 0 equals 0. So therefore, the accounting equation is shown in this business transaction. So in this example of business transactions, it is clearly evident that accounting equation is very important. So the accounting equation proves that the total asset is equal to total liabilities plus total owner's equity. And it is important to first know what are the account titles involved on each transaction and then follow the rules of our accounting equation. So indeed, the accounting equation is very important in our business by simply reflecting it on our business transactions.
If we have accounting equation, we also have called the expanded accounting equation. So this is the formula of the expanded accounting equation. Asset equals liabilities plus owner's equity plus income plus expense. So as you can see, there are two major accounts that being added to our expanded accounting equation. So what are those accounts? Those are the income and the expenses. So on expanded accounting equation, we should familiarize the account titles under income and expenses. So from the word income, it is the revenue, and the expenses, it is the cost. Income or revenue. Income is the money that the business earns from selling a product or service, or from the interest and the dividends on marketable securities. So in short, it is the money that your company earns while operating a business. For example, I had a barber shop. So I had an income of revenue of 100,000 per month. So that is my income or revenue upon having a service business. Another example, I had an income of revenue for the month of March worth 200,000 in my sari-sari store. So, 200,000 is the income or revenue. So, madaling salita, ito yung kinita ng iyong business, whether it is a service or a sales business. Here are some of the common account titles under income. First, service revenue. Second, sales revenue. Third, interest revenue. And fourth, the dividend revenue. In accounting 1, we will focus more on the service revenue and the sales revenue. So, service revenue is generated when rendering service, and sales revenue is generated when you are selling goods. So, if we have income, we also have expenses. So, expenses are the cost of operations that a company incurs in generating revenue. As the popular saying goes, it costs money to make money. So, ito yung lahat ng gastos natin upon establishing or operating a business, whether it is a direct or indirect expense. So, sa madaling salita, ito yung kabuuang nagastos mo sa pagpapatakbo ng iyong business. So, sa expenses dapat lahat ika-calculate mo. Even the smallest expense, ililista mo kasi it is considered an expense. Expense will always be an expense at all times. Here are some of the common account titles under expenses. First, cost of goods sold. Second, utility expense. Next, depreciation expense. Next, office expense. And next is the supplies expense. So as you can see, they are all expenses. Here are another examples of common account titles under expenses. First, the insurance expense. Next, the salaries expense, the bad debt expense, the interest expense, and the rent expense. So out of those expenses, the salaries expense and the rent expense are the most common. Ito yung pinakapangkaraniwang expenses na ating na-encounter sa isang business. The rent expense, which is the upa, and the salaries expense or the sweldo ng mga tauhan mo. Here are some of the application of the expanded accounting equation. So on the example, we will see different business transactions that involve our expanded accounting equation, which is asset equals liabilities plus owner's equity plus income plus expenses.
Business transaction number 1. Paid salaries of employees worth 325,000. So on my previous discussion, I already introduced to you the expanded accounting equation, which is asset equals liabilities plus owner's equity plus income plus expense. So the difference between the accounting equation is that there is an income and expense portion. So on the original accounting equation, this is the original. It is only asset equals liabilities plus owner's equity. Whereas on expanded accounting equation, there is an addition of income and expense. So our steps are the same. First is to analyze the business transaction, which account titles are involved on each transaction. So on this transaction, the account titles that are involved are the cash and the salaries expense, because we needed cash to pay for the salaries of the employees. So for the assets, it's 325,000 negative. So indicate that there is decrease on cash because of the payment of salaries. So expense, 325,000. So again, use the accounting equation. So asset side is 325,000 negative. Then the liabilities plus owner's equity plus income plus expense is negative 325,000. Therefore, this is balance. Business transaction number 2. So, earned through sales worth 875,000. So, our first step is to identify what are the accounts title involved on the transaction. So, on this transaction, the account titles that are involved are the cash and the sales revenue. So, under assets, the value is 875,000. So, on the liabilities plus owner's equity plus income plus expense is the sales revenue. So, the sales revenue is under income. So, let's use the accounting equation to balance. Asset side is equal to 875 equals to the total of liabilities plus owner's equity plus income plus expense, which is 875,000. So, using accounting equation, it is balanced that 875,000 equals 875,000. Business transaction number 3. Paid miscellaneous worth 75,000. So, the account titles that are involved in these transactions are cash and miscellaneous expense. So, we categorize it. So, for our asset, it is negative 75,000. So, there is a negative sign which indicate payment of cash. So, there is a deduction of 75,000 on cash. So, on liabilities plus owner's equity plus income plus expense side, it is miscellaneous expense which is 75,000 negative. So, using accounting equation, negative 75,000 equals negative 75,000. So, using the accounting equation, business transaction number 3 is balanced.